My name is Octavio Yamas, founder of Yamas Financial. I help wineries simplify their finances. Winery owners often tell me the same thing. Our sales look great, but somehow our cash is always tight. That's the reality of running a winery.
Wine is a cash-hungry business. Between harvest, barrels, bottling, and aging, you're constantly putting out money long before you see it come back. Today, I want to share 3 practical ways to fix your cash flow so you can spend less time stressing about money and more time growing your business. Tip number 1. One of the biggest cash flow killers in a winery is excess inventory. Every case sitting in your warehouse is cash that's trapped. And if you're holding thousands of cases of bottled wine, you've basically turned your cash into storage costs. So here's what you could do. Forecast demand more carefully. Look at sales by channel, whether it's DTC, wholesale, or the tasting room. Do monthly inventory reconciliations so you know exactly what's moving and what's not. Prioritize selling through older vintages before bottling new wine. Once, I worked with a winery that had more than 2,000 cases just sitting there untouched. By tightening up their forecasting and selling through that excess inventory, they unlocked over hundreds of thousands of dollars in cash. So the key takeaway is this: inventory isn't just wine, it's your cash. Treat it that way. So the second way to improve cash flow is tightening up accounts receivable. A lot of wineries extend 60-day terms to distributors and restaurants, and that means you're basically lending them money while you wait to get paid. Here's some quick wins. Shorten your credit terms where possible, even from 60 days down to 30. Offer small discounts like 1 to 2% for early payments. Stay disciplined on follow-ups. Send reminders the day invoices are due. Don't wait weeks later. Leverage your accounting software to keep a close eye on aging reports. I know it's tempting to avoid chasing customers, but the truth is cash flow improves dramatically when you treat receivables like gold. Every day you collect faster is more flexibility for your winery. The third way is making smarter use of financing. I see many wineries rely on cash reserves to get through harvest or bottling. The problem is those are huge expenses, and draining your reserves all at once leaves you exposed. Instead, consider setting up a line of credit with your bank, specifically for seasonal expenses. Matching financing to the life of the asset. For example, short-term financing for bulk wine or bottling, and long-term financing for vineyard development. Avoid using your operating cash for big one-time costs. Financing can smooth that out so you're not constantly scrambling. Financing isn't a weakness, it's a tool. The wineries that understand this keep their operations running year-round. So to wrap it up, if you want to improve your winery's cash flow, focus on the 3 areas I talked about. Manage your inventory levels, tightening up collections, and use financing strategically. These steps can free up real cash and give you the breathing room you need to run your winery more confidently. I'm Octavio with Yamas Financial, and if you'd like to talk more about strategies for your winery, feel free to reach out. I'd love to help. Thank you.